Morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, streaming live in YouTube. We have a very exciting morning, actually. A lot's going on here. Congress has actually canceled negotiations on the, or postponed, I should say, negotiations on the stimulus bill, the $1 trillion. So it's affected the metals markets here. And we are looking at a very strong move in the digital assets markets here. We're going to take a look a little closer in terms of the gold market and digital assets and see what the rest of the week brings us. Also, we'll take a look at the weekly reports for the rest of the week. We'll be right back. Jumping right into the market here, let me upload. I'm running a little bit behind here this morning, the daily numbers here. Digital assets here have opened pretty strongly this morning. While the metals here are quite a bit lower here. Gold is down about $22 here, $22.90, $17.40. Silver down about 60 cents, down at $23.72. And the green is in the digital currencies, digital assets. Well, we have a lot of red basically on the gold mining shares. Robinhood is up to, let me take a look here. $57.40, up about 4.49%. Let's just take a look at some of this digital assets here. Coin at 15, up about 5-6%. And GBTC. We're going to be updating some of these numbers here after the hour, the first early morning session here. The numbers are going to get updated. GBTC, 5%, 5.1%, 37.85. We have a rally that we have seen on GBTC from 30.88 just a few days ago on the 5th of May, of August. All the way up to about 38.80. So we've seen a pretty substantial rally on these assets here and Bitcoin. Let's take a look at the futures. Up about 6%, 45,560. With a new high of 46,180 for Bitcoin. We have rallied from a low of about 37,300. We're going to be updating these numbers here as the day progresses here. but I wanted to take a look at some of these digital assets here. We've taken some profits on GBTC, and we are trading this market using the VCPMI very effectively. Let me come back here to the gold market, and we saw a crash here, a flash crash early this morning, yesterday early, initially, and we kind of held around the 1758 level until about 3:15 when it opened last night, and the market got sold off aggressively on the news that the Congress has postponed the stimulus meeting until they come back from recess, while millions of people still are under tremendous financial duress. So this stimulus issue has been politicized, just like everything else that they're doing. And while they are politicizing this issue, going on vacation, they're leaving millions of people stranded, waiting for some kind of government assistance from a situation that they had nothing to do with. But the initial impact obviously was bearish for the gold market. It gave the central banks, or the short side of the market, to essentially use this as another excuse to try to break the market down. I believe that at this point, the gold and silver market are very obvious instruments of manipulation. I've been around this block, so to speak, for quite some time, and I have never seen an anomaly like we see in the gold market. The longer prices are manipulated, suppressed artificially, the more pressure it builds underneath the market. It almost becomes like a pressure cooker. And the result, the consequence, is explosive. Now, one of the things I have pointed out in my previous videos here is pretty much the counterintuitive reaction that we have seen in the gold market since the pandemic occurred last year. And the gold market rallied to a high of about over $2,000, $2,100. By August 2020. While the bulls have been pontificating explosive moves in the gold market to incredible numbers in silver that exceed any common sense or logic in what they mean. And so the market at this level here back in August, again, discounted the damage that potentially was caused by the pandemic. And it went into a counterintuitive swing correction all the way down to a Fibonacci retracement, a Fibonacci correction down to 61.8% as of March 8th of this year. We saw a low of 1673. Now, throughout all this move here, it includes the Reddit attack, the short squeeze early in January that turned out to be a bull trap. And you saw the market revert back down to the extreme below the mean into this golden ratio number that we have, which is that 61.8% retracement that we originally saw the bottom completed. Made a double bottom on March 30th and rallied now all the way up to 1910 to establish this solid trendline resistance for an uptrend channel. Now, when you were up here, you didn't have the price come down as it did, but you did have the channel that you see here established that gave us a very clear picture that the bottom of the channel emerges right into the weekly numbers and even the daily numbers. If you look at the left of the chart that we're using for today and for the rest of this week. And what we have seen here is the market revert from the average price up into that weekly level of resistance of about 1835 a couple of times. And upon failing to break through, we saw this massive attack once again in the market. Around July, the end of July. Now, what's interesting here, I want to point out, is that this was a failure of this down flag, of this bearish flag that initially gave us a signal of a reversal, but it did fail. It was negated, and the market came down to the extreme below the mean and came down to test that golden ratio, almost level of 1677, 7790 was the low that tested it, that tested the the previous March lows. And that's what happened here overnight. And this was on the news that Congress canceled the or postponed for the time being the stimulus package. This is how sensitive markets are right now as a consequence of this stimulus discussion that's been politicized now. And what it is it's driving money into digital assets. Coin, Robinhood, Grayscale Bitcoin Investment Trust. With the idea that the dollar is getting weaker as they continue to print endless amounts of fiat currency out of thin air, basically. So we have a little bit of an anomaly going on that is obviously influencing the price of metals shares. Gold mining shares are at a discount to the rest of you might say primary markets, commodities. We're looking at gold and silver at a discount to basically most commodities. Let's watch the market here a little bit as we've come down, as you see, into the area of accumulation of supply in silver. 2366, 2358 is a very strong harmonic alignment area. We want to see possibly a key reversal date to the upside by closing about 2395. For gold, we want to see a close above 1737. Ideally above 1746. That will bring in the daily buy one level as well. But we're in a buy trigger mode daily and weekly on gold based upon the fact that we came down to the extreme below the mean levels, and where the AI, where the VCPMI tells you accumulation of supply is where basically you're going to find potentially buyers come into the market. What I want to do is share with you a report that we just published in the Associated Press this morning. Actually, on the 7th. How high does inflation need to go to trigger the long-awaited gold rush? A lot of volatility today on the jobless news that came out today. Job growth accelerated in July and the unemployment rate fell. The unemployment rate fell to 5.4%. In response, gold had a massive sell-off. The economic news has brought the issue of tapering back onto the table. Market overview. A lot of volatility today on the jobless news that came out today as the report was published the 7th. Job growth accelerated in July and the unemployment rate fell. Job growth was faster than in almost a year. Payrolls increased, the unemployment rate fell to 5.4%. In response, gold had a massive sell-off. Gold has broken the support of the variable change in price momentum indicator daily level and has gone down into the weekly buy 2 levels. Fundamentals have changed the momentum of the market after the gold reached a high of 1835. This is the these are the levels here that I just reviewed, and I'm looking at that the market tried twice to come up here. We made 2 or 3 tries into this level. The last time was yesterday when we could not get through the high of 1736. Regardless of the fundamentals, gold came down and supply came into the market. The VCPMI level of gold is 1775 as of last week when we wrote the report. So we are at an extreme below the mean, and in fact now we're trading at 1738, 39. So we are definitely extremely oversold. One of the things I wanted to point out here in this article was the difference that we have in most commodities, which have exploded. You know, crude up 41, energies up substantially higher, and you know, we're looking at gold at down 7%, silver down 7%, palladium down 8%. In comparison to all the other assets, the metals are on a fire sale. And as frustrating as it may be, these markets will adjust. Will adjust. One of the things I want to point out to you is that Trader University recently posted a video on inflation from bad to worse in relation to the consumer price inflation. And the numbers are pretty much staggering in the velocity that we're seeing these numbers change. And so we still, I believe, have to see whether these numbers are temporary or we have shifted into a different paradigm of value, which is what I believe is happening as a consequence of all this tremendous stimulus that we have seen. Some of these numbers, you know, according to Michigan, University of Michigan, bad buying condition, high prices. We haven't seen this, you know, on this chart since 1978. For goodness sake, it's a historic move. Homes, you know, pretty much the automobile industry, they are at just historic levels that are completely out of line to the mean. And I'm not so sure that this can be, you know, sustained. And the thing that I'm looking at, and most people are failing to recognize, is that one of the reasons why we're getting tremendous rallies in real estate and the stock market is because the currency, the underlying currency of its asset, is being devalued silently. And regardless of how high stocks markets go, even in like Zimbabwe, you know, it went to 21,000 record levels, up 145.41% since the beginning of 2021. The currency is being completely destroyed. This is a reflection of that destruction taking place. Same thing in Venezuela. We got record stock markets in Venezuela. And the reason for it is not because the economy is great, it's because the currency is imploding. And, you know, we're beginning to see the values, for example, on SPY to gold, that even though the stock market is making new highs, real values are really not being accomplished here as the currency implodes. Yeah, the currency implodes 30%. You gain 30% on your assets, but that makes it even. You're not getting any better, any richer. You're not getting any healthier. You're not building any wealth. And if you're running, pretty much inflation levels at this levels that we're talking about, 5-6% inflation according to government figures, more than likely we're looking at 8-9% real inflation. You include gas and energy. And so the explanation basically is that, and one of the things that I see is the media is focused on arguing that inflation is just transitory. And what I want to point out to you is that we are at a CPI rate of 5.32%. Even if inflation falls 2%, it doesn't mean that things will get cheaper. Just that they will not rise as fast. Prices are still compounding each year. If the CPI is at 100, it would rise to 105 this year. And then even if inflation is at 2%, it would still rise to 107. The number goes negative because central banks would not allow inflation to go negative. Given our huge debt load, the Fed can't allow deflation to occur. So let's say we're running an 8%, or even, let's say, according to their numbers, 6% roughly level of inflation. And what are we getting on the 10-year note? About 120 right now. We're still under by about 4.5%. That inflation is eating away at the currency on an annual basis. That's a huge devaluation of your assets based on the currency devaluation. And part of the problem is that the Feds are exploding their balance sheet. The M2 money stock is exploding. They're continuing to print money, and it doesn't necessarily mean that this money is growing in purchasing power as they print. It's the opposite. The more they print, the more they talk about stimulus, $3.5, $4, $5, $10 trillion, the more the dollar will implode. And I think what we're looking at is basically an acceleration of the US dollar. And in fact, it has put into question basically the challenge of the US dollar as the world's gold reserve currency, potentially being challenged by a virtual currency like Bitcoin. This is a historic time. These are historic events. And at the same time that we're going through this incredible transformation and reset, is an incredible opportunity to benefit. The markets will adjust. The metals will adjust. And when it does, if you're not there, you're going to miss it. The type of move that is expected in precious metals at any time could be spectacular in nature. Don't lose faith. Be patient. Hold on to your core belief, your core position in precious metals. And any chance for you to continue to add and to buy is an opportunity to build your I believe, foundation to protect yourself against a continuing devaluation of the US dollar. Thank you again for the opportunity to share this with you. Be well, my friends. Have a great trading week, and we'll keep you posted here as we go through this together. Take care.